Okay, MegaWhale team, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic start to your week. In today's video, we are diving deep into the macro and the short-term charts. By the end of today's video, you'll have a detailed and well-rounded understanding of not only what is happening, what to expect next, and the key levels you should be paying attention to. We're going to be discussing the short-term price action, the possibility for a correction, key levels where bounces and reversals could develop, and our bullish targets. We're also going to be discussing the daily and weekly channel, as well as 3 major technical indicators you should be watching on the weekly and 2-week charts. Before we do get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos of Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you are interested in, join us on Telegram. It is the first link down below. You will get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop with cryptocurrency, with Bitcoin, and the relevant economic news. And if you were interested in taking your trading to the next level, join us on VIP. You can find our VIP information over here. We have a sale between 10 and 30% off memberships. This is only going to last for the next 36 hours, and we have 10 discounts left to give away. You can find more information about the VIP by clicking these links. We'll show you the VIP now. The VIP, we post trading setups with exact entry prices, exact targets, exact stop losses, trade justification, exclusive analysis, and so much more. Again, not only will we get access to all of these trading setups we post, you'll also get access to our group chats, our general chat, our trading chart and education chat, our news, help, and daily video chat. Nearly 700 members. Check it out, join up, and we'll see you in there. Go ahead and contact me. Let's jump into the video. So as we can see, over the past 24 hours, in fact, over the past 48 hours, we haven't really seen too much price action. Now, that is very much expected as we are in the weekend. Volume drops off, volatility drops off. We see a bit of a crab market over the weekend, and that has resulted in this horizontal chop. This horizontal chop is spanning the price range between 65,400 to 65,800. As we can see, not really much has happened. But if we do zoom out to the 4-hour chart over here, we can see we have a very weak bearish divergence developing. This is, of course, when we have the rising price action but decreasing momentum. This is a discrepancy between the trend and the strength, which is an early indication of potential exhaustion, or that the buyers are starting to lose steam. They're starting to run out of gas. This is an indication that we could potentially develop into a short-term correction, and that short-term correction might develop into a downtrend. We're going to be discussing that as a possibility in the video as well today. Alongside that, like we said, we're going on the weekly, we're going on the daily, we're going on the 2-week. We have so much to talk about, so let's go ahead and get stuck into it. Starting on that market data, 24-hour volume is at 5.6% in the green. We're sitting at 86 billion. 24-hour liquidations down 6.9%, 93 million. Of the 93 million, 48 million coming from longs, 43 million coming from shorts. So pretty clear cut between the two there. Moving over to the DXY has broken down from a 1.5-year long support line. This is an area of confluence, an area where we generally see rallies or steep corrections develop from. In fact, we have seen one breakdown from this region in the past. That was on the 10th of July 2023, and this is going to be our second breakdown. We do know we have broken below the support level now, with confluence from a breakdown from a symmetrical triangle formation, increasing the likelihood for a directional continuation. We are expecting a move into 95.94, which is going to be this low point over here, 95.94, over the coming 6 months, which could really set up a fantastic rally for risk asset markets. Moving over to the S&P 500, looking fantastic. Yet again, another weekly candle close above the weekly high points. We are looking for directional continuations up to 6,000. What we are noticing here is that the bodies of these candles are starting to shrink. This could be an early indication of exhaustion. Again, we are seeing that exhaustion develop on Bitcoin already. But whether or not this exhaustion is actually going to move into a short-term correction or a downtrend is a whole nother point. Exhaustion doesn't always develop into downtrends. Sometimes we have absorption with the exhaustion and we see continuations. So while we remain above 5,600, 5,700, we are expecting continuations upwards. Only upon the loss of 5,600, 5,700 on the weekly would we start to be a little bit concerned for corrections back to these weekly lows. And while we remain above these weekly lows, we are still expecting 6,000. However, if we lose those weekly lows, we expect high time frame corrections. And if that were to happen, that would be a sell signal, not only for S&P, but also for Bitcoin. That is why we look at these markets. But let's go ahead, guys, and jump into the video today. And before we do, if you want to support me, support the video, support yourself, and support the channel, sign up to BitGet, BitUnix, or BingX. You'll get a 15% trading fee discount for life. The links are down below. Based on your trading volume, that 15% discount can build up to a 45% trading fee discount. That has saved me well over $100,000 this year alone, and much more money in my career of trading. Again, you can support me, support the channel, and even support yourself by signing up. We'll play a quick ad and we'll jump back in. I'd like to introduce our partner, BitUnix. BitUnix is a global, non-KYC, no country restriction exchange, making it a perfect exchange to trade on if you're from the USA, from Canada, the Netherlands, or just prefer to trade without KYC. This exchange is a futures and spot exchange with over 200 different trading pairs and some of the lowest fees in the game. If you sign up with my link down below, you'll get access to 15% off your trading fees, as well as an exclusive reward center where you can claim up to a multitude in USDT prizes. So go ahead and sign up with my link down below for 15% off, and I'll see you in there. Okay guys, let's go ahead and get stuck back into it. So we are starting on the 4-hour and the short term for Bitcoin, discussing the possibility of a correction here as a consequence of the exhaustion developing on the 4-hour RSI. Are we going to see a correction? If so, how low? Or are we going to see those continuations? This is what we're going to be taking a look at right now. So as we mentioned in the intro, we are starting to see a little bit of exhaustion develop on the RSI. We have that decreasing RSI trend line representing that during the periods between our 20th of September to current, we are seeing RSI dropping, which is an indication of weakness. We are seeing some weakness develop. Now, during that period, you're also seeing the price action increasing, which is a discrepancy, hence the divergence between the two. We are seeing, again, the strength weakening and the trend increasing. This is an indication of exhaustion. The buyers are running out of gas. Now, what we can see here is going to be our overall uptrend. Our overall uptrend is represented by this diagonal trend line. We have also got an uptrend on the RSI over here we are taking a look at. If we drop below this uptrend on the RSI, we are then expecting a correction to retest this uptrend on the price action. We've been in this uptrend since the 7th of September, which is essentially that low 52K retest. We have been in an uptrend the entire month. So a drop below this trend line right over here on the RSI would indicate that the exhaustion we are seeing has actually turned into negative momentum, and we would then expect a correction to retest that uptrend, that monthly uptrend. Now, if we were to break below this monthly uptrend, which could be possible as a consequence of the loss of the 50 EMA and of course the negative momentum, I would be looking for two things. I would be looking for a retest of our base of low. If we look at our hourly chart, we have got our low range over here. This is going to be our range low. We are looking for a retest into our range low. You can see this is actually our strong low, a correction under the trend line, a deviation of the range low before a continuation higher. That would be the ideal scenario if we were to see the price drop into that region. In my opinion, this area would be the area I'd be re-entering long positions. I'd be looking for altcoin longs. I'd possibly be looking for Bitcoin longs within this pocket. If we, however, drop below this strong low and we do not see that bounce in that region, it does open up the possibility for a slightly steeper correction for Bitcoin, which could take us into that 60,000 psychological support level, as well as the POC on the 4-hour, which is going to be our point of control. So we are looking, summarizing again, while we remain above the uptrend, we are very much in an uptrend. However, we are starting to see this uptrend that we've developed over the last month show indications of exhaustion. These indications of exhaustion, however, are preliminary. We cannot ignore the potential consequences these do hold. And the consequences are that if we do see that exhaustion develop into negative momentum, which will be confirmed by the breakdown in the RSI, we are likely going to see a correction to retest the trend line. And if we retest the trend line from a position of weakness, which we will have if we are underneath that RSI trend line, we are likely going to see a correction to our nearest support, which is going to be our strong low at the prior horizontal level. That horizontal level is going to be, again, a base of support and a strong point of reversal, and therefore, if we see a retest, we are expecting a reversal. However, if a reversal does not play out, the next level we are watching will be the POC level at that 60,000 psychological region on the 4-hour chart. That is exactly how we're playing the short term. On the bullish perspective, if we do not see the RSI breakdown from our trend line and we do not see the retest of this level, we are still expecting macro continuations into the 68,000 high, potentially one more swing upwards. The reason we say 68,000, again, if we go to that daily chart, if we take a look at our macro downtrend we have been in now for over 5.5 months, that level lines up with about 68,200, 68,250. So we are looking for a retest of that level, and ideally we would like to see a retest of that level before breaking down from this uptrend. Maybe a retest and then a breakdown and correction and continuation, or ideally we just see a retest and continuation through. So let's go ahead now and talk about this chart. So this is going to be our daily chart. We're going over the short term. You're still worried about the short term, or you're not too sure what's happening, just go back and watch what we just said. Everything else that happens between, and again, we'll summarize again, everything else that happens between this region should be considered negligible. And by negligible, I mean expected volatility. There is an expected range of price action in which the price action can move between, which would have little to no influence on the higher time frame projections of the price action. Meaning, while we are in the range, for example, this horizontal region, any movement between that range has very little impact on whether or not the price is going to go up or down. It is the breakout of that range that has impact, and therefore we shouldn't over worry about the fluctuations in that range. And the same can be said about this higher time frame range. Anything that sustains above that trend line should be considered natural price fluctuations, and we shouldn't be too concerned for corrections unless that trend line breaks. So that is essentially short-term price action. Moving over to the daily. Again, guys, we are expecting an eventual retest of the high. This, of course, is going to be a bullish consolidation pattern, as we have been saying for God knows how long now. We are expecting a continuation. The measured move does suggest to us that a break of the range high will eventually take us into the $80,000 region. That is something we are confident on. Now, we only expect that move to 80,000 once we close a daily candle above the high. If we close a daily candle above the high, it is very likely we are going to see the total market cap as well. This is going to be total market cap break through its respective high. I just dragged the whole thing across its respective high, and we're going to see cryptocurrency initiate that next leg up, potentially into that $3 trillion market cap. A massive move coming if that does happen. Now, that would only be the start. We could potentially see 4, 5, 6 trillion market cap if we actually get that parabolic phase, but for now, that is what we'll be expecting. Moving back over to a daily chart over here, guys, we can see the key levels really are going to be that prior horizontal. So we're looking at this particular level right over here, this particular high point. This is going to be at around 64,200 to 65,000. So again, if we do drop below that short-term trend line here, we'd be actually temporarily dropping below that high point. Again, if we go to a 6-hour chart, we can see it a little bit better. This point right over here, which was once resistance, here it is, resistance, support, support, breakdown, resistance. If we were to come down and retest the trend line, we're retesting. If we break the trend line, we drop back below that region momentarily. So something you should also pay attention is going to be the breakdown of that region, guys. Moving over to the higher time frame, the weekly chart. Let's talk about the key levels you need to pay attention to. So in terms of the weekly trend, we always want to be trading with the market. So again, when we're in a macro uptrend, you want to be taking more long positions, macro downtrend, more short positions, because the macro direction is kind of like a magnet. It's going to pull the price action generally in that direction, overemphasizing continuations in a long direction, and again, underemphasizing continuations in short directions. Meaning short movements or corrections might be less drawn out than our long movements when we are in these macro uptrends. So taking a look at this at the moment on the weekly chart, we are sitting above the weekly Gaussian channel, which is a massive thing, okay? If we take a look at price cycles, let's go back to the 2017 cycle. We can even go back to the 2013 cycle. The 2013 cycle on the weekly, we break above the Gaussian channel. We remain above the weekly Gaussian channel the entire time until we break down. Upon the breakdown, that moment, the break of the upper range of the Gaussian channel from the top side down is an indication the trend on the macro has shifted. Therefore, we enter a macro downtrend and we go to our bear market bottom. Moving over the 2017 cycle, we see the breakout of the Gaussian channel. We remain above the Gaussian channel on the weekly the entire time. We eventually break below and we enter a macro downtrend. If we look over to the 2020 cycle, we break out of the Gaussian channel. We continue above the Gaussian channel the entire time until breaking down and entering a macro downtrend. It is literally a carbon copy. We can see in the current scenario, we break out of the Gaussian channel, we remain above the Gaussian channel the entire time, okay? And we are looking at the horizontal resistance, so the breakout of the Gaussian channel post horizontal resistance, continuing above the Gaussian channel the entire time. We've even retested it, and then only when we break down do we enter a high time frame downtrend. Additionally, if we take a look at the Ichimoku cloud, a very similar scenario here with the Ichimoku cloud. We remain above the cloud the entire time, again, until we break down. And you can notice the breakdown of the cloud right over here happens at the same time as the breakdown of the Gaussian channel. It is slightly leading in terms of the break upward, but again, the breakdown of the cloud happens as a point of which the macro trend flips. So we can use both of those indicators to get an understanding of whether or not we are actually entering a high time frame downtrend or not. And until we breach those levels, we are macro bullish. Simple. Let's take a look at another indicator. This is going to be on the 2-week. Let's just get rid of these drawings and move to the 2-week chart. The 2-week chart, particularly significant. We're going to be taking a look at one indicator, which is going to be the Ichimoku cloud baseline. I want you to focus on this red line. This red diagonal line, we remain above. Again, when we break down, we enter downtrends. While we are above it, we are in uptrends. Now, if you look historically, there have been periods where we break above, break below, break above, break below. But if you measure out the distance between the breakdown and the lows, or the break up and the highs, we generally see a minimum 15% move. Now, these moves can extend to hundreds of percent during bull markets, or hundreds of, or 50, 60, 70% during bear markets. But we do generally see a higher time frame directional move when they are broken. And therefore, if we do look at this 2-week, we can see the 2-week is sitting at an area of support, and therefore, while we are above it, we can use this as an invalidation for the uptrend, and thus, while we are above it, we are in a macro uptrend. So Bitcoin is bullish, as I've been saying for many, many months. Actually, we've been bullish on Bitcoin. A lot of people always say, oh, all the YouTubers are always late, to being bullish. I don't really consider myself a YouTuber. I'm a trader, true and true. I just happen to have a YouTube channel. But again, we had a YouTube channel about 6 years after we been a trader. We were bullish literally at this point here. We initially bought at 18,000, and then we bought again in these regions. Again, all those posts are in Telegram. We have in our VIP, our trading setups and accumulation plans that we posted all the way back here for purchases in this range. And we have been bullish literally the entire time, not one slipping bearish. And we will remain bullish until my bullish invalidations are met, and only upon my invalidations will I flip bearish. But I stick to the data, I stick to the charts, I do not let emotions control my decisions. That is it, guys. Have a fantastic day. Thank you for tuning in. Make sure to check out the Telegram. Again, it's the place to be. Join up, first link down below. We do have the sale on if you're interested in VIP. And of course, sign up to the links down below to BitGet, BitUnix, or for 15% trading fee discounts. And we'll see you in the next video. See you then.